Welcome to TFE Talks, Navigating Wealth, Business, and Legacy, the podcast from Thomas Fisher and Edwards. Each episode, our attorneys bring you expert insight on estate planning, business strategy, and legacy building, breaking down complex topics into clear, actionable advice. Whether you're solidifying a strategy we've discussed or preparing for what's next, this podcast is your resource for thoughtful, practical planning. You ready? Let's dive in.
Hello and welcome to another edition of TFE Talks. I'm your host, Jordan Goway, and I'm joined once again today by Ben Ferris, an associate here at Thomas Fisher and Edwards in Greenville, South Carolina. Ben, thanks for joining me, and we're feeling charitable today, and so we are going to talk about a charitable topic in considering private foundations versus donor-advised funds and when they might be a right fit for our clients.
Yeah, Jordan, thanks for having me, as always, and looking forward to talking a little bit about how we assist charitably inclined clients in our day-to-day.
Yeah. And so to go through this topic, I think it's best that we consider one of these mechanisms first and then move to the other, and then we'll kind of compare and contrast at the end. And so let's start with donor-advised funds. These are something that I think has become very popular in the last few years, last decade or more really. And so what is a donor-advised fund and why have they become so popular recently?
Yeah, it's great you mentioned it. Really, I think of it as kind of one of those buzzwords that you hear a lot. I think a lot of people know the term donor-advised fund, but maybe don't quite understand exactly what it is, or they know, some people have donor-advised funds. Really what it is, at the end of the day, is a charitable account with a sponsoring organization. Easiest way to think about that, you can get a charitable account with a sponsoring organization all over. I think the University of Florida allows through their foundation or a similar mechanism to open donor-advised funds. I think the most popular one currently is Fidelity Charitable, kind of a subset of Fidelity, the brokerage management group, and a large company. And then through there, you're able to open a charitable account that really what happens is you transfer title to the assets to the organization, in this case Fidelity Charitable, and from there you remain a donor who is advising on the use of the fund. And so it's an investment account similar to a brokerage account or a retirement account, obviously with charitable uses, but it remains can remain invested in the interim, and then allows you to kind of set up yourself and any successor advisors for long-term grants from that fund.
Yeah, and so as you mentioned, a key player there is who is that sponsoring organization. Fidelity is a very popular one. Another popular one, and one that we see with a lot of our clients, are local community foundations. There are numerous community foundations across the country, including one here in Greenville, one in Spartanburg, where we have an office as well. And those are often sponsoring organizations that we see as well. And there are tons and tons of other sponsoring organizations where you can set up these donor-advised funds. So what is the role of that actual sponsoring organization?
Circling back to the first part of your question, I maybe didn't completely answer. The sponsoring organization plays a huge role in why these have become so popular. They handle, 99% of what you would think of the paperwork, of the administrative difficulties, of adhering to the rules and regulations of donor-advised funds. Most of that burden is passed off from the donor to the sponsoring organization. And so that's a huge plus and a huge benefit for, I think we were talking about it briefly yesterday, clients who want to do good, who want to be involved with charities, but also have a day job and don't necessarily have the time or desire to take on the great amount of paperwork and creation, formation, building the entity, managing the entity that comes with, some of these public charities or a private foundation. And so really what that sponsoring organization does is they take that burden off of you, but in exchange for that, they take legal title to the assets. And so as I was, briefly talking about earlier, you remain in an advisory capacity as a donor, but the sponsoring organization kind of sets the menu, if you will, of maybe your investment options. Maybe they set the menu of where you could make grants. Now, I think most of our clients don't feel overly limited or feel like the sponsoring organization has limited their advice in a way that makes them regret their decision, but they do, for all intents and purposes, legally own the assets. And so from that perspective, they kind of, by taking the burden, they also take the legal title, and then that's the role they play from there. They're assisting you in making your grants and handling the paperwork, but also are the legal owner of the assets.
Yeah, and so you already touched on it a little bit there, but an individual makes a contribution to a donor advised fund, which is held by the sponsoring organization, and then that individual is an advisor on that fund. And so, what sort of discretion or control does the gifting individual have at that point once they're just an advisor?
I think most people find it to be a partnership and that they're able to, like I said, it's kind of a menu of options as far as investments and then the grant making. I think most people feel that they are able to sufficiently express their desires. Now, there's certain rules with donor advised funds and IRS scrutiny that can come as far as who's exercising what level of control and whether the sponsoring organization is adhering to the rules and actually maintaining legal title. But I felt, and in my experience, everyone I've talked with feels like the flexibility provided by the donor advised fund in terms of the administrative paperwork is well worth maybe the little bit of true legal control that they're giving up. Now, again, it is a legal right to the assets that is in the sponsoring organization. I feel like that's sometimes a piece that can get missed on this. People feel like, hey, I'll just use a donor advised fund and then I'll remain in complete control. You'll remain an advisor and you should be in a partnership type relationship with the fund. Now, granted, somebody could, they could change ownership, they could change their rules, and you may not like that as much. But generally, I feel like most clients feel that it's a good partnership and they're able to sufficiently advise in a way that their charitable desires are being carried out with the use of their funds that they've transferred to the account.
Yeah, and so donor advised funds are great for folks that want to be charitable. They maybe don't know exactly how they want to be charitable at this moment. They don't want to just give to their college or just give to their church, just give to a specific charity, but they want to set aside some money that can be given to charity over time. It can be invested and grown over time. It's pretty easy to set this up in a DAF with a sponsoring organization, let them handle all the paperwork, let them help with the investing, and then over time make those grants or distributions out to these charitable organizations. And it's just a pretty streamlined process overall. So that's the benefit of the donor advised fund. The downside is that there's not that full control, and there may at sometimes be a lack of flexibility in how the assets are used. And so we shift our attention then to private foundations, which I think is kind of the ultimate flexible option for someone who wants to be very charitable.
Right.
But as you mentioned earlier, they may have to give up their day job to be this level of charitable. And so what advantages does a private foundation have as compared to a donor advised fund?
Well, it's control, right? A donor advised fund, think of it as and it's a little bit of the compare and contrasting, but think of it as you're a passenger on a ship, you're advising the captain. Private foundation, you're the captain of the ship. You're steering the ship. You're able to control the mission, the identity, the grant making process. You can make it as custom as far as who can apply for grants, run scholarship programs. You're, for all intents and purposes, in charge of all of it, really. You have to follow the Internal Revenue Code and the regulations regarding private foundations, excise tax regime, et cetera. But you remain in control of the mission, the identity. Really, I think of the easiest way to think of it is you're running a charitable business.
Yeah.
You're in charge of all of it. You set a board of directors. Of course, the board oversees certain things, but you're running it. And we're going to get you in here in the office, and we're going to do bylaws, and we're going to do formation documents, and we're going to consider future planning. And that's where we were talking about, it kind of becomes your day job. If you really want to do it and run it right, doing a private foundation is a lot of work, and it's not necessarily in a bad sense. Some people really care that much. And so what we're doing, I think, Jordan, and what I've seen you do in conferences is we're trying to decipher from the clients, do you just kind of have a charitable itch and you want to set something up so you have the flexibility to do something with charities, or are you really, passionate and you have the financial resources to do something? In that case, and if you want control and you potentially want, people, friends and family involved with running it, we're going to start looking at a private foundation, but we're going to advise you appropriately of, there's going to be some risk and we're going to need to know your accountant, et cetera, et cetera. But It really is, at the end of the day, control. It gives you the ability to run the operation as you see fit from start to finish.
Yeah, and so what are some of the complications or disadvantages that come up with the private foundation, other than just, as you're mentioning, the time that the individual maybe has to pour into it? But what other sorts of legal complications or disadvantages can arise with the private foundation?
So there's, obviously every year there's the Form 990, the private foundation tax return, which obviously plays into another thing with private foundations, privacy. So donor advised funds, oftentimes you're able to give, maybe in a way that's more private, less public. Private foundation tax returns are public tax returns. There's websites out there people know about. I mean, think about the big private foundations. Everyone knows them, right? The the Melinda and Bill Gates Foundation, the Clinton Foundation. It's a bit more of a public sphere, and then so you lose some privacy. You're required to work with your accountant on an extra tax return. We always tell clients, well, it's like any tax return. Your client, your accountant mostly handles it, and you assist, but you have to, first few years, you're acquiring all the necessary information and trying to work with an accountant and who's a good accountant. And then obviously one of the biggest things that's kind of the scary part of a private foundation is the tax regime and the qualifying, I think it's 5% of 5% is the required distribution each year, or you face the excise tax. And so really it's just a level of concern or anxiety that maybe could come up, that often comes about with clients when we say, hey, it sounds like you might want to do a private foundation. They say, well, I've heard that it's just so hard and so many things can go wrong. Self-dealing rules. I don't think it's that hard to do if you have the right person and you're able to explain everything to them. And most people want to run a charity in the right way, but it's just that sense of anxiety and, hey, there are a lot more rules that you need to follow and be aware of. And I think people get the swing of it after a couple of years, but certainly, some speed bumps at the start.
And also at the start, there's the legal fees to start it up. As you mentioned, we've got to draft bylaws. We've got to draft all the documents to set this up as a real entity. And often we'll get phone calls from folks that they're like, well, I want to set up a charity. And then we tell them how much it's going to cost to set up a charity. And they end up deciding that might not be the right fit for them. And that's fine. But it is something that it has to be the right fit. And ultimately, if they're not willing to pay those initial legal costs, they probably weren't going to be willing to put enough into it for it to be worthwhile anyway, and probably would have been better off with a donor advised fund or just direct charitable giving or something of that nature. And so when might a person consider doing a private foundation rather than a donor advised fund? When do you have kind of a marker in mind that kind of flips the switch and says, no, you actually need to consider this private foundation?
I think it's like I hinted at it earlier, and you touched on, there's probably some monetary threshold out there that would not only from a legal fees perspective, but just from having a base of funding that it makes sense to begin a grant-making foundation. Of course, there's private operating foundations, which maybe would be a topic of a future episode of kind of a private foundation that runs more like a public charity. But really, from my perspective, it's about understanding what the client's goals are. As with a lot of our work, what is their goal? Is the goal to, hey, maybe I'm transitioning out of a business and I'm the type of person who just has to have something to do, and I'm having a huge liquidity event. I'm charitably inclined. I want to do something with my second chapter with this money, and I have specific goals in mind or grants I would like to make. Well, hey, you sound like a good candidate for a private foundation. Or is it just, somebody who wants to give, but they aren't sure what they want to do. And, maybe they give some money to their church or they give some money to the Y, but they'd like to make bigger gifts at some point in life. And they'd like, maybe they're having high income years now and they'd like to go ahead and make contributions, take the charitable deduction, but they aren't sure exactly what they want to do with it. And I think that's where, same thing with financial advisors, you can guide people towards, hey, maybe a donor advised fund for now. And if we get more liquidity or you run into more funds or have a real desire or passion in the next few years, we can always consider a private foundation versus somebody who comes in and is really looking to run the mission and has an idea. I think a lot of times if they have an idea of what they want to do, then we're looking more at a private foundation. You can tell when somebody's passionate about it, and you can tell when somebody's just, looking to do good and looking to take advantage of charitable donations, but not necessarily sure exactly how they want to do it.
Yeah, absolutely. And you mentioned there a liquidity event after the sale of a business. So that's one place where, okay, someone sells a business, they take some of the proceeds and they put them into a private foundation or into a donor advised fund. What are other ways that charitable planning can tie into business succession planning, maybe even leading up to a transaction?
Yeah. So I think, well, and we were talking about it, certain organizations with closely held stock, you can donate that to, whether it's a donor advised fund or, some other entity. But it's always a thought, right? It's always a thought from lowering potential income tax, and also maybe maybe you are charitably inclined, but all you have is closely held business interests, and you're about to sell your business, and you'd like to do some good, but really you're going to have cash, and you have the stock now. Well, I think certain partners we've worked with in the past are willing, subject to certain restrictions or rules that they put in place, to accept a donation of the closely held stock, and then theoretically, when the business is bought out, their asset would transition as well. So it's always a thought, I think, again, it always circles back though to what's the client interested in. Certainly, we're not pushing people to do that. But if they're saying, well, hey, I never anticipated having this much money. I've got a potential sale coming up. What are my options? Well,
Right.
then we can feed them some options of, hey, you could consider donating it here. We've worked with this partner in the past. They've done well with it. But it's just, it's facts and circumstances of the client's wishes, and it always ties in for the right client.
Yeah, and crucially, if it is the right client that wants to consider that type of planning, they need to do it well in advance of a transaction, because once you've sold the business or once you're very close to a sale, you're probably recognizing the income from that
Right.
sale, paying tax on it, and then maybe getting a charitable deduction on the back end. Whereas if you can, put that in the donor advised fund or something in advance, maybe you avoid paying that tax to begin with. And then finally, where does charitable planning and donor advised funds and private foundations, how can that tie into an estate plan if this is someone who maybe they're not setting up these sorts of mechanisms during their lifetime? Can they have an estate plan that either provides a charitable benefit or maybe even sets up a donor advised fund or a private foundation after their death?
Certainly, I think we include all sorts of language from time to time that instructs the trustee in the way our documents function to create either a foundation or donate to a donor advised fund or create a donor advised fund. I think frequently we use the language if one is not already in existence, in case they go ahead and make it during their
Right.
life. But one of our, at least for me, one of the initial questions we always ask, or I always ask in an estate planning conference, is just try to figure out, does this person want to consider giving to charities off the top, we call it, but just cash distributions at their death, or do they want to set up a private foundation or a donor advised fund, or are they thinking of setting one up? They may or may not, and we're not sure whether they're going to do it in the time period that they have left. And so should we consider funding one in their documents? And I will say, the other unique aspect of a donor advised fund that can tie into the estate planning is the ability to name successor advisors. And so if you do go ahead and get one set up, you can appropriately name the person who would be the advisor on your behalf once you're gone. And that kind of allows for that legacy planning from that perspective that, I think always ties into the estate planning of, well, what are we going to do about this fund over here, right? As opposed to doing a beneficiary designation with a retirement account. When you're thinking about a donor advised fund, it's, okay, well, who's going to step in and who's going to be able to carry on your charitable intent from that perspective?
Yeah, absolutely. So just like with any other part of business planning or estate planning, the idea is that we want to be able to talk to our clients. We want to be able to talk to them. We want them to let us know what is important to them. Is it important that they give to charity? Is it specific charities? Are there specific goals that they have, but maybe not specific charities? And do they want to do it during lifetime? Do they want to wait until their death to have something set up? All of those are sort of things that we need to talk through with them and have them kind of be open with us about, so that we can decide what the best options for them are, because there are a ton of options here, and donor advised funds and private foundations are certainly two good ones. And so, Ben, thanks for coming on today and talking about the differences in these two charitable techniques. And I look forward to having you on future episodes of the podcast to continue to talk through all the planning techniques that we can offer.
Thanks, Jordan.
Thanks for listening to TFE Talks. For more information, please visit our website at www.tfelawfirm.com. You can also follow us on LinkedIn, Facebook, and Instagram by clicking the links below in the show notes. If you have any questions about topics discussed in the episode, or you have recommendations for future topics, please email us at info@tfelawfirm.com. See you next time.